Hi guys, it is Pila here. Let's talk about which page volatility 151S. We hardly talk about this one. Always remember whatever you do in the market, always start from higher time frame so that you can see almost everything that is happening. Do not just open your chart and start on smaller time frame. You won't see the bigger picture. For an example, if you analyze on smaller time frame, you'll get your entry here. You'll get your exit here. Why? Because of you don't know how far the market's gonna go, whether it's going up or it's going down. But on a bigger picture, you can see that the market is moving from here to the resistance. Now you know that whatever is gonna happen here, you have to hold up until the market reaches the resistance. Rule number one, wait for the market to come to you and then execute based on the direction of the market. Should you fail to execute based on the direction of the market's going to be against you. You'll find yourself losing. So always remember, go to higher time frame, look at the direction of the market, move through all the time frames, check if the market is aligning through all the time frames, and also check the current price where it is, and also check where you're going to get your opportunity. How? Let's say maybe this is daily. The market is going up. This is your daily chart, right? You know that the market's supposed to come back here. On your left-hand side, let's just assume that we have a continuation pattern. The market went down, it went back up. Let's just do something like that. Now you know that the market's supposed to change the direction and go down and come to this breaker structure, right? On smaller time frame, this is what you are looking for. A structure maybe that looks something like that. Maybe. Or what is it that you have to do? You have to observe where the market is. Remember, the market is going down, right? On smaller time frame. You must check where the market is. Just because of you see that here you have a continuation pattern, it doesn't mean you must sell. For you, if you're gonna sell here, where you're gonna be safe, it's above the continuation pattern. You know that the market's supposed to respect the continuation pattern no matter what. But for you to be safe, you have to place your stop loss above the continuation pattern. Same applies here. If you're going to jump in here and sell, your stop loss supposed to be above, of which that's not what we are looking for. Our risk management is no longer balancing. It is no longer giving us what we are looking for. Therefore, what you do, take your time. Look where the market is. This is your 4 hour chart. You then move from 4 hour chart. You go to roughly 1 hour chart. On 1 hour, you'll get a structure that looks again like that. The market went up, it went down. Now, you'll see maybe you might see something like this. Let me just draw it different because it is not going to be the same. You're going to see something like that. And then the market went down. What do you have here? A breaker structure that needs to be tested. A breaker structure that needs to be tested. So what do you do now as a traders? Remember, you went to higher time frame of which is daily, of which is this one. This is 4 hour or 4 hour, it's fine. And then this is your 1 hour. In this scenario or in this situation, what did you get? All of these time frame are telling you that we are selling. Now, the question that you're supposed to be asking yourself is, okay, I can see the market is going down because of the continuation pattern there. As the market is going down because of the continuation pattern on daily chart, I want to check the structure on 4 hour. On 4 hour, this is what you get. You go to 1 hour again to check also how the market looks on smaller time frame. You go to a smaller time frame, you get this. What does this mean to you? Already on 4 hour chart, you know that the market's supposed to go up. and test the breaker structure before we go down. You know that, okay, I'm not going to do anything up until the market comes back to this breaker structure. That's when I'll be looking for opportunities. All right. You then move to 1 hour. Okay, on 1 hour, this is my support. It was broken, supposed to be tested as a resistance. There's a continuation pattern there, even the continuation patterns that far, but this is some sort of example. Your continuation pattern might be here. They will spike the market up before going down. This is what they do most of the time in the beginning of a new trend. They will give you this kind of formation before. This is our confirmation that we have broken this. That means the market is no longer going where? Going up. Now we are pushing the market to the downside. Now, they know very well that here, so many people will be looking for entries here. And they'll place their stop losses just above. The market will go for their stop losses before going down. So your job is to pay attention to what happened before the market break and also look at this trend. What is it you have there? Isn't it that this is your resistant? That means they're going to leave something there. Some of them, they call it a fair value gap. I don't know, whatever they call it, it's still fine. But here, we just want to see what happened. If there's nothing here, the market will just move without going up. So now that you know that you start from higher time frame, this is not our higher time frame, guys. The higher time frame that we use, you can start from 3 months, but unfortunately, because of we are on tariff, the highest time frame that we have here, it is daily chart. Not unless, yeah, the highest is daily chart. So if the highest it is daily chart, it means we're gonna start on daily and go on 8 hour, 4 hour, up until 1 hour. But here I just made an example of how you look at the market. So now let's look at this pair on daily chart. This is volatility 151S. What do we have here? A trend line. The market respected the trend line. This is what I always say to you guys, that whenever you approach the market, always pay attention. I'm just gonna say this again, that if you are trading trend lines, you need to be patient. You need to be patient. It takes time for the market to come back to your trend line, but as soon as the market comes back to the trend line, you know that you're gonna make a lot of money. Let me make another example. This one, it looks like that. This is your first time touch. This is your second time touch. It means you had to wait for the market to come back and give you the third touch there so that you can do what? So that you can sell. You waited for how many days? The market went up, it came back down, it went up, came back down before reaching the trend line. Now, confirming the power of the trend line the way I use them. Look at how the market was moving before they test the trend line. After they tested the trend line, look at how they went down. It went down as if there was nothing here. It is because of the people that were waiting for the market to reach that trend line as our third touch. People and the banks, they also know that, okay, we're going to sell. Remember, your trend line will also pose as support and resistance. It means we have a resistance. Up until they break the trend line, it's when it's going to become our support. But we are not going to talk about that now. What I'm saying here, you must know the pattern that you are trading in the market. If you are trading continuation pattern, wait for your continuation pattern to be fully formed. If you are trading supply and demand, wait for the market to come back and test your supply and demand. Don't rush to sell. That is what will create losses. Wait for the market to come to you. And guys, do not forget to like and subscribe and share as well. So let's continue. I'm gonna move from daily to 8 hour chart. Remember, before I go to 8 hour chart, we have a breaker structure here. And as we are going down in the time frame, this is where the support is. Already it was broken. Right. We can just put here for now based on the line chart. That's where the support is based on the line chart. So let's move to 8-hour chart. On 8-hour chart, we have to adjust. This is where our support is based on the line chart. Now, if you look closer here, the market gave us our support here. The support was broken, and there's a continuation pattern there. The market was supposed to respect the continuation pattern and what? And the breaker structure and go down, but the market went higher. Why was that? I assume by now you guys know why. You move to the previous trend, look at the market, you'll know that something happened before they break. That is why it is important for everyone to go through all the time frames so that you can see things that you're not going to see if you're jumping the time frames. Right now, this is what you have. Let me erase and apply your line chart. The market looks like this on a line chart. Sharp. We move to 4-hour chart. This is our 4-hour chart. Still, the support, it is where it was on higher time frame, right? No problem. What I want you to understand again, if you're out there, you trade trend lines, remember this. You have to wait for the market to give you the touches before you do anything. It means you need to see this touch and this one, then you draw your trend line. You wait. The market will go down and do whatever it wants to do. No entry up until they push back to the trend line. You look for your entry. Sharp. I move from that. So from where we are right now, we can see that here, this is our support level. The support was broken here. If you look deeper, you can see that the support was broken, the market went down. This green candlestick that you see here, that went as far as here, it was once red. The market went back to test what? To test the breaker structure on which time frame? On 4-hour time frame. Hence, you can see we are on 4-hour chart. Therefore, the market went down. Now we are coming back to the same level. That's the main reason why the market is penetrating, going straight to that continuation pattern, of which now give us a new resistance. We are looking for sell opportunities. Where is the market going? To this continuation pattern. Isn't it that we are coming from this trend line? Your breaker structure was tested. Your continuation pattern is pushing the market down. The continuation pattern is pushing the market up. What is it that we're supposed to be doing now? We're supposed to be waiting here for the market to come down to the continuation pattern so that we can take trades that are corresponding with the direction of the market from a higher time frame. Do not look at the current price and feel like, you know what, I can see that the market is going for the continuation pattern. Let me sell. I'm going to exit and buy there. The market can just go up. The market can just move to the upside without going down. That's the reason why I'm saying for you to become profitable, you have to learn to wait for the market to come to you. This is where you're supposed to be waiting. You're waiting for what? For the market to come to you. But if you'll be like, I feel like the market is going up, or I feel like the market's going down, you start selling, the market goes up. This is not the safe zone because of your safe zone was up there on the continuation pattern, your stop loss is above. If you're going to enter now and sell, that means the stop loss is supposed to be where it is. Look at the risk. It's too much. And look at the profit. This is your entry, your take profit, your stop loss. Your trade is like it looks like 5 is to 1. Because of these 5 is your loss. This one is your profit. Hence, you can see here This is your 1. This is your 5. What else is supposed to be? 1 is to 5. Risk less, make more. When I hear you are risking more for less as a profit, so it's not make sure this one. So these are the things that people must learn to avoid whenever they are approaching the market. Take your time. Look for possible things that will cause the market not to go to a direction. And as of today, I'm not expecting anyone to experience unnecessary losses based on jumping on a moving trend. How are you going to grow in the market if you are out there jumping on a moving trend? Feeling like the market is going down, you jump. You jump based on what? Wait for the market to create something solid for you. Here is your continuation pattern fully formed. You have the ebook. You know how to trade a continuation pattern. It is fully formed. Your job is to wait for the market to come to you. That's it. It's fine. Remember, it is a choice to take losses because of you know what to do, but you're out there doing the opposite. So you must not be in a position of crying next time when you find yourself taking losses. Already, if you look what happened here, you put this below. This is your support, right? And then that's your support on higher time frame. There's a continuation pattern here. The market went straight for the continuation pattern before going down, exposing a resistance here. Put your horizontal line like that. They went up to the continuation pattern. They tried going up. Hence, you can see they are trying to create a continuation pattern there. So what is it that you have to do here? Wait for the market to go down. And if the market continues going down to this continuation pattern, then that's when you'll be looking for an opportunity for the market to go back up. Now, what I want you to do again, I want you to go to smaller time frames such as 1 hour and look for something that you can also use right now, maybe to enter. But if I look closer here, there's nothing that says you can get a chance to enter. There's nothing that I see here. Let me check on 30 minutes. On 30 minutes is just the market structure. Same thing that I was explaining to you, that when the market is going down, and then you see there's your breaker structure, the same structure that I created that looks like that. I said as soon as they break this, know that the market will come back and test, right, and go down. Only if there is nothing there that was left. This is 30 minutes time frame. There's literally nothing here. That is why the market turned there. Now the market is going down, right? What is it that you can do if you want to be in a position of selling right now? At your trend line like this and push it all the way up. You can see that we have broken this trend line. Maybe if we go to 15 minutes, gonna be way exposed. This is your 15 minutes chart. Let me adjust. Yes. Already on 15 minutes, you're supposed to be in an end right now because they went down, they came back to test. Here is your breaker structure coming from your far left. You also add the trend line there. To those who are trading on smaller time frame, they get opportunities, pushing the market to the downside. So if you fail to approach the market this way, I think you have to go back and start. Once you do that, then things will become easy. And again, should it happen that the market will just move to the downside, wait for them to break below this. Once they break below, let's say they come down to the breaker structure, they go back up and then they come down. You'll have a support here. They'll break the support to show that we are no longer going up. Wait for them to test the broken support. That's your end. You go down with the market. A market yet decider at some point, where else you're expecting the market to go up, the next thing the market is going down. What is it that you must do in that scenario? You must learn to retaliate very quick based on what they're giving you. Do not forget to like and subscribe. Yes, do not forget to like and subscribe and also share the live with your friends, guys.